Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, a quick check-in with everybody that of course watched our previous week ahead commodity report and also our gold asset of the day video, where we had discussed in detail with you last week our overall positioning for gold, which was essentially for a sell short in the latest week. We felt that the breakout to 7-year highs, you were going to see a lot of FOMO in the markets as a result of this. We continue to see many analysts, many news feeds continue to push the narrative that gold was getting the safe haven bid as a result of the coronavirus, and as such gold was very vulnerable to a takedown, and that is exactly what we saw last week. Of course, gold into the close on Friday, breaking down over 1,000 points in the latest week. And we've continued to see that big outflow, not only in gold, but also across the board in platinum and also silver, which many times you want to be looking at for the correlation. So in the latest week, it has certainly worked out to be a contrarian in the market for gold, selling short into that rally right at the start of last week. As we mentioned, in fact, live during last week's commodity report, you noted the exact point that we started to see that sell-off on the Monday, and in fact we're doing exactly the same again this week. In fact, our highest entry today for a sell short is from $1,609 per ounce, and we're really looking at capitalizing on yet again another correction to the downside, as we saw in the latest week that over 60% of retail traders has started to go long in gold. However, hedge funds and money managers have continued to trim their net long positions, and this is again where many purely technical traders were trapped at the start of last week, FOMOing in at the highs of the beginning of the week with that breakout out to $1,689 per ounce. However, of course, that was not the right move to be taking in the latest week, and you really wanted to be looking at opportunities to reverse position and take advantage of a move lower for the precious metals in the latest week. Now, you can see here that still, of course, very much headline news right now is the coronavirus epidemic, where we've continued to see a rapid increase in the spreading of the virus outside of China. The global death toll has now risen to 3,000, and overall 86,500 people worldwide have been infected. So what should you do right now? How should you position yourself for this week? So let's talk you through exactly what we're looking at for the week ahead. First of all, just moving over to the gold market, which right now is trading at $1,594 per ounce. So we have executed now a sell short at $1,609 per ounce. That's our highest sell short that we've executed so far this week, and you can see we're already seeing that pushback, that rollover in price. And again, note that many retail traders have bought this week. They've been looking to take advantage of potentially a better price here with gold with the recent pullback that we've seen, but you really want to pay attention to a number of factors. One of those is the gold to silver ratio, which has recently broken out on Friday to 34-year highs. So you need to be very aware of that. When the gold silver ratio is going up, it does tend to have a negative impact on both gold and silver prices. We've started to turn a bit of a corner here with respect to the cycles. As I mentioned in detail on gold asset of the day, typically the month of March is bearish for gold, and this is the same as you go into April as well. The end of this bullish cycle that we typically see in the previous few months does complete right at the end of February. So we've taken advantage of course, all of this upward move over the months of December, January and February. As I mentioned in last week's report, we had banked over 2,000 points on the upside with reverse position, and in fact last week on the sell short side we banked further profits again. And also, in fact, another market to mention too was palladium, which worked out extremely well last week. This market from the beginning of last week banked us 1,800 points in just over 24 hours. Absolutely love the palladium market. It is a great mover. Now, another market that you want to keep on your radar right now is of course going to be silver. Now, silver had a large sell-off on Friday, over a $2 move to the downside. Not only silver, of course, we also saw a large sell-off on platinum. So we'd mentioned this previously, that platinum, you want to keep a very close eye on this for leading the metals, and often when platinum is having a very large sell-off, as it did last week, it started to break down at the start of the week. You really want to watch out for the potential for both gold and silver to follow suit as well. I mean, look at gold right now. It's currently trading at $1,500 1,593 US dollars per ounce. So as I've mentioned, my overall bias for this week on the metals, well, gold in particular, is to be shorting this market. We have flipped now from being long, which we've been building positions over December, over January, over February. We are now looking for further opportunities to continue to sell. As I mentioned, we've sold into gold today at 1,609 US dollars per ounce. You can see here again, we're seeing a nice pullback towards the close. I'm looking for more downside, and effectively I'm looking for a move back towards certainly Friday's lows and back towards the lower end of this channel as we continue to progress throughout this week. So overall, our positioning is for the sell side now of gold as we continue to progress throughout this week. And this brings me back to my point last week with gold. So feel free to go back and watch last week's reports where we were selling during the week ahead commodity report. We discussed this in detail, and that was after gold had broken out to 7-year highs, and all of the majority of narratives out there were getting very much bullish for gold prices. But we had already been capitalizing on these moves over the month of December, January and February, and we felt that this was coming to the end of completion. All of our cycles data and market intelligence were suggesting the top was going to get put in for gold last week, and we certainly saw that at the start of the week. We rolled over, filled the gap, and then continued that decline. Of course, that acceleration to the downside on Friday, which was over 1,000-point move here on the downside for gold last week. But this is not going to be over just with last week's move. We've now got fresh opportunities this week as well. In fact, our trade right now is up 160 points that we've executed just earlier on today. Then moving over to crude oil, we've benefited from this breakout to the upside via a derivative, which is up over 6% just in one day. So from the gap on the Sunday open is where we entered in for a long, and we've already managed to capitalize on a 600-point breakout. US oil right now is trading at $47.17 per barrel. It's up 5.83% on the day. So we've had a significant retracement after the gap lower off the open, and of course oil has also found support here at 43 US dollars per barrel in the latest week. What I would watch out for over the course of this week will be Tuesday's API data, Wednesday's oil inventories data, and of course the OPEC meeting later on this week as well. If oil does manage to follow through to the upside here and we can clear above overhead resistance, this is where the low could then be in, and we really start to base here, especially as we move and transition throughout the month of March, which is typically actually a strong seasonal month for crude oil as well. Where you have the challenge for oil at the moment is, of course, headline news regarding the coronavirus. When you see fears start to accelerate and you see more countries, more people getting infected with the coronavirus, and essentially more uncertainty in the markets, this is where oil can start to pull back and reverse. You want to watch out for these potential bear flags with oil at the moment, where if it cannot follow through to the upside and we do start to see a reversal, it can be very quick to then give back the gains here with oil and rotate back towards the lower end of the channel here. So we've seen multiple bear flags so far throughout these breakouts to the upside over really the last couple of months here, over the months of January and also February. So I can highlight several of those bear flags to you where we continue to have a rally and then we stumble once oil starts to make a move up towards resistance. It can't follow through and then it rolls over and breaks back down again. So we've had a sizable move today already, a 5.8% move to the upside. As I mentioned, we've already capitalized via another derivative here with the energies where we've banked over 600 points so far today, but we've also been very nimble in protecting profits. Certainly would keep a very close eye on oil as we transition towards the OPEC meeting at the end of the week. It could be a turning point here. For the time being, it is decision mode over the course this week, and it still could pull back if we were to see a failed breakout to the upside. This is where you could see another potential breakdown in price and a bear flag here for US oil. So just bear that in mind. But as I mentioned, my favorite trade at the moment is to be shorting into gold, and this is what we've taken advantage of already today, getting our highest entry at 1,609 US dollars per ounce. In fact, that trade now is moving up to around 180 points profit, with gold trading at 1,591 US dollars per ounce at the moment. I'm effectively looking at more downside for gold over the course this week in a rotation back towards the swing lows, as I mentioned earlier. And I do hope that many of you were able to maximize and capitalize on that sell-off last week. Certainly the comments that we got on last week's gold asset of the day and also the week ahead commodity report suggested that many of you who watch us at the Gold and Silver Club were able to take take advantage of that, were able to use that intel, that research in the market to have a much stronger impact last week on your trading, rather than blindly following technical analysis, which was very much on the buy side for gold last week. Many traders out there, purely technical traders, were massively caught off guard last week with the large sell-off that we saw to the downside at the end of the week for gold. So again, well done to all of you who are able to really capitalize on that move based on the information that we discussed in detail with you last week. And of course, if you would like to learn a research-driven approach in the markets, where you're not only looking purely at technical analysis, but you're looking at market cycles, you're also looking at the hedge funds and money managers, their positioning in the market versus the retail traders, you're taking into account seasonality, geopolitical news, fundamentals, you're also then marrying that up with sentiment and research, and of course our in-house market intelligence, and that is what will give you an edge in the markets. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to our real-time trade alerts, real-time trading research and market insights, as well as access to our private members academy membership site and support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.